Based on the historical data and forecast, Bitcoin has been fluctuating within a range between $66,900 and $69,300. The RSI has been oscillating around 40 to 52, indicating a neutral to slightly bearish momentum. The Bollinger Bands show periods of volatility, with the price occasionally touching the upper and lower bands. Considering these factors, a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels is recommended. We will implement a swing trading strategy with a focus on capitalizing on short-term price movements. The entry price will be $68,300, coinciding with the forecast price on April 13, 2026, and the recent upward trend. The stop loss will be set at $67,800, just above the recent support level of $66,900, to limit potential losses. The initial target price is $69,000, aiming to capture a reasonable profit within the current resistance level. If the price breaks through the $69,000 resistance, we will adjust the target price to $69,400. This strategy aims to balance risk and reward by utilizing technical indicators and support/resistance levels to identify optimal entry and exit points. Based on the historical data and forecast, Ethereum demonstrates a fluctuating trend with periods of consolidation and minor upward movement. The RSI values, generally between 41.9 and 53.6, suggest the asset is neither significantly overbought nor oversold. However, the recent dip in RSI towards the lower end indicates a potential opportunity for a long position. Considering the support price of $1,980 and the forecast prices hovering around $2,100 to $2,150, a strategy focusing on short-term gains is advisable. I propose a long entry at $2,090, with a stop loss placed slightly below the support level at $1,960. The initial target price should be set at $2,130, aligning with the recent resistance and forecast highs. To refine the strategy, we'll incorporate the Bollinger Bands. The price consistently trading within the band suggests a stable, albeit volatile, market. If the price breaks below the lower Bollinger Band, around $1,960, it signals a stronger bearish trend, triggering the stop loss. Conversely, if the price reaches the upper Bollinger Band, around $2,210, it indicates a potential for further upward movement, prompting a revised target price. Therefore, a secondary target price of $2,210 should be considered, with a trailing stop loss adjusted to protect profits as the price rises. This combined RSI and Bollinger Bands approach offers a balanced strategy, capitalizing on short-term trends while mitigating risk. Based on the historical data and forecast, BNB shows a downtrend with a recent bounce. The RSI is consistently below 50, indicating a bearish sentiment, but nearing oversold territory. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential bounce. I propose a contrarian strategy capitalizing on this potential rebound. We will enter a long position at $595 with a stop loss at $583, just below the support level. The initial target price will be $605, aiming to capture a quick profit from the anticipated bounce. To refine this strategy, we will use a dynamic target based on the RSI and Bollinger Bands. If the price reaches $605 and the RSI moves above 50, we will adjust the target to $607. If the price continues to rise and the RSI reaches 60, we will further adjust the target to $598. This tiered approach allows us to maximize potential gains while managing risk. The overall portfolio will favor this long position, allocating 70% of the capital, with the remaining 30% held in cash to manage volatility and potentially enter short positions if the trend reverses. Based on the historical data and forecast, XRP has been trading sideways with support at $1.32 and resistance at $1.34. The RSI has been fluctuating between 38 and 48, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a potential for a breakout. The forecast for the next week indicates a downward trend, with prices falling from $1.33 to $1.29 before potentially rebounding to $1.3. Given these factors, I recommend a cautious strategy focusing on short-term opportunities. I propose a combined strategy leveraging RSI and Bollinger Bands. We will initiate a short position when the price touches the resistance level of $1.34. The stop loss will be set just above the resistance at $1.35 to protect against a false breakout. The initial target price will be the support level of $1.32, offering a quick profit. If the price breaks below the support level of $1.32, indicating further downside potential, we will adjust the stop loss to $1.31 and extend the target price to $1.30. This strategy combines the trend-following nature of the Bollinger Bands with the momentum signals from the RSI, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Solana exhibits a clear downtrend. The price has been consistently declining from $91.7 to $80, and the forecast predicts further decrease to $76.6. The RSI consistently hovers below 50, indicating a bearish momentum, with values dipping as low as 36.7, suggesting oversold conditions. The Bollinger Bands show a contraction, with the price nearing the lower band, further reinforcing the bearish outlook. Therefore, a short selling strategy is warranted. My recommended strategy is to initiate a short position at $80. Given the strong downtrend and the forecast, a conservative stop loss should be placed slightly above the recent high of $81.5, at $82. The initial target price should be set at $77, aligning with the forecast. If the price reaches $77, consider moving the stop loss to break even to protect profits and potentially extend the trade towards $76.6, the lowest point in the forecast. This strategy combines the bearish trend, oversold RSI, and Bollinger Band signals to maximize potential returns while minimizing risk. Based on the historical data and forecast, TRON shows a slight upward trend, fluctuating within a defined range. The RSI consistently hovers around 60, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening slightly, suggesting increasing volatility. Considering the support price of $0.315 and the resistance of $0.319, a conservative strategy focusing on short-term gains within this range is advisable. We will implement a combined strategy utilizing RSI and Bollinger Bands. Our strategy will involve a buy order when the price touches the support level of $0.315, setting a stop loss at $0.313 to limit potential losses. The initial target price will be $0.318, aiming to capture a quick profit. If the price reaches $0.318, we will then adjust the stop loss to $0.316, securing some profit while allowing for further upside potential. If the RSI dips below 30 near the support level, we will hold off on the buy order, waiting for a more favorable entry point. This approach balances risk and reward, capitalizing on the observed trend while protecting against adverse price movements. Based on the historical data and forecast, Dogecoin has been trading within a defined range between $0.0905 and $0.0963. The RSI has fluctuated between 42.8 and 51.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has recently been approaching the lower band, suggesting a potential bounce. Considering the forecast data, which predicts a downward trend initially, followed by slight recovery, I recommend a contrarian strategy. We will initiate a long position at $0.0885 when the price touches the lower Bollinger Band. A stop loss will be placed at $0.088, just below the lower band, to protect against further downside risk. The initial target price will be $0.092, aligning with the resistance level and a reasonable profit margin. To refine this strategy, we'll incorporate RSI signals. If the RSI drops below 20, oversold, while the price is near $0.0885, we will enter the position. If the RSI rises above 80, overbought, while the price is around $0.092, we will take profit. This layered approach combines trend following with momentum indicators for enhanced precision. The final portfolio will allocate 60% to the Bollinger Band strategy, 30% to the RSI strategy, and 10% as a reserve for adjusting based on market volatility. This diversified approach aims to maximize returns while mitigating risk, capitalizing on both price action and momentum shifts in the Dogecoin market. Based on the historical data and forecast, Cardano shows a downtrend with consistent support around $0.24. The RSI fluctuating between 37.2 and 50.5 indicates periods of oversold and overbought conditions, but generally remains within a neutral range. The Bollinger Bands have been contracting, suggesting decreasing volatility. The forecast for the next week predicts further decline, reaching as low as $0.237. Therefore, I recommend a short position strategy. We will enter a short position at $0.246, placing a stop-loss order at $0.254 to limit potential losses if the price reverses. The initial target price will be $0.237, aligning with the forecasted low. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI drops below 20, oversold, we will cover the short position. Conversely, if the price touches the lower band of the Bollinger Bands, it might signal a potential bounce, prompting us to adjust the stop-loss downwards or consider a partial profit-taking. If the price reaches $0.237, we will take partial profits and move the stop-loss to break-even. The ultimate target is $0.23, and if the price reaches this level, we will close the entire position. This layered approach combines trend analysis, forecast data, and technical indicators for a more robust and adaptable investment strategy. Based on the historical data and forecast, Bitcoin Cash has shown a downtrend from March 24, 2026, to April 13, 2026. The price has consistently tested the support level of $431, and the forecast indicates further decline. Considering the RSI values, which have been consistently below 50 and approaching oversold levels, we can implement a contrarian strategy. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential bounce. Therefore, I recommend a long position with an entry price of $430. Place a stop-loss order at $427 to limit potential losses if the downtrend continues. The initial target price is set at $437, aligning with the recent resistance levels. To enhance the strategy, I suggest a dynamic approach. If the price reaches the $437 target, we can move the stop-loss to the entry price of $430 to secure profits. If the RSI indicates an oversold condition below 20 and the price bounces off the lower Bollinger Band, we can consider scaling up the position. If the price fails to reach the $437 target and shows signs of further decline, we should exit the position at the initial stop-loss of $427. This portfolio combines the RSI and Bollinger Band strategies to maximize potential returns while minimizing risk. Based on the historical data and forecast, Chainlink has shown a slight upward trend with periods of consolidation. The RSI has fluctuated between 40 and 54, indicating neither strong overbought nor oversold conditions recently. However, the forecast data suggests a potential slight upward movement in the coming days. Considering this, I recommend a moderately bullish strategy. We will enter a long position when the price touches the support level of $8.64. The stop-loss will be set just below the support level at $8.5 to mitigate potential losses if the price breaks down. The initial target price will be the recent resistance level of $8.94, aiming for a quick profit. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks below the lower band, indicating increased volatility and potential downward pressure, we will tighten our stop-loss to $8.4. Conversely, if the price touches the upper band, suggesting an overbought condition and potential reversal, we will consider taking partial profits at $9 and adjusting the stop-loss to break even. This dynamic approach, combining support/resistance levels with RSI and Bollinger Bands, will help optimize returns while managing risk. The final target price is $9.1, after the price reaches the resistance level. Based on the historical data and forecast, Ethena demonstrates a downtrend with significant volatility. The price has been fluctuating within a range between 0.0797 support and 0.0891 resistance. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, with values frequently dipping below 35, suggesting oversold conditions. The Bollinger Bands show that the price is approaching the lower band, indicating a potential bounce. The forecast for the next week suggests a continued downward trend, with prices hovering around 0.0786. Considering these factors, I recommend a short position strategy with a focus on capitalizing on the expected downward movement. The entry price for this short position should be $0.0827, coinciding with the first day of the forecast and the price approaching the lower Bollinger Band. The stop loss should be set at $0.0848, just above the forecast high for the week, to limit potential losses if the price unexpectedly reverses. The target price is $0.0778, aligning with the forecast low for the week. This strategy combines the RSI's oversold signal with the Bollinger Band's indication of a potential bounce and the overall bearish trend suggested by the historical data and forecast. This approach aims to capture a portion of the anticipated downward movement while managing risk effectively. Based on the historical data and forecast, Stacks demonstrates a downtrend with price fluctuations around the support level of $0.213. The RSI consistently stays below 50, indicating a weakening momentum. The Bollinger Bands show that the price has been trending toward the lower band, suggesting a potential for further decline. Considering these factors, I recommend a short position strategy. The entry price should be set at $0.219, coinciding with the first forecast price. A stop-loss order should be placed slightly above the upper Bollinger Band at $0.225 to limit potential losses if the price unexpectedly rises. The target price for this short position should be the support level of $0.213, offering a reasonable profit margin. The RSI is currently at 38.1, which is not yet oversold, but the downtrend and forecast suggest that it may reach the oversold level. The strategy combines trend analysis, RSI indicators, and Bollinger Bands to optimize risk and reward. This portfolio prioritizes a short position with a clear entry, stop loss, and target, aiming to capitalize on the observed downtrend in Stacks. Based on the historical data and forecast, Falcon Finance demonstrates a generally downward trend with recent signs of stabilization around $0.0701. The RSI fluctuates between 37.2 and 47.2, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing, suggesting decreasing volatility. The forecast for the next week predicts a slight upward movement, with prices ranging from $0.0704 to $0.0718. Considering these factors, I recommend a moderately bullish strategy with a focus on capitalizing on short-term upward movements while managing risk. My strategy involves a tiered approach combining RSI, Bollinger Bands, and support/resistance levels. Firstly, enter a long position at $0.0704 when the forecast price begins. Set a stop-loss order at $0.0694, just below the recent support level and the lower Bollinger Band to limit potential losses. The initial target price is $0.0712, aligning with the forecast high and the upper Bollinger Band. If the price reaches this target, consider moving the stop-loss to break even to protect profits. A secondary target price is $0.0718, corresponding to the highest forecast price. This strategy aims to capture short-term gains while maintaining a conservative risk profile. Based on the historical data and forecast, just shows a generally upward trend with some volatility. The RSI consistently fluctuates above 50, reaching overbought territory several times, indicating potential pullback opportunities. The Bollinger Bands have been widening recently, suggesting increased price volatility and potential for breakout moves. Given the current RSI of 67.1 and the forecast prices hovering around $0.065, I recommend a long position strategy. We will enter a long position at $0.0645, placing a stop-loss order at $0.0635 to limit potential losses. The initial target price will be $0.066, aiming to capture a portion of the forecasted upward movement. To refine this strategy, we will incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, which is currently around $0.0651, we will adjust the target price to $0.067. Conversely, if the price touches the lower Bollinger Band, around $0.0637, we will consider exiting the position or tightening the stop loss to $0.063. This dynamic approach, combined with the RSI and forecast data, should allow us to maximize returns while managing risk effectively. The portfolio will prioritize this long position, allocating 70% of our capital, and holding 30% in cash for flexibility to capitalize on potential reversals or new opportunities. Based on the historical data and forecast, Zcash shows a generally upward trend, with recent price fluctuations. The RSI consistently remains between 43 and 57, indicating neither strong oversold nor overbought conditions. The Bollinger Bands show that the price is currently near the upper band, suggesting potential for a pullback or consolidation. Considering these factors, I propose a strategy combining trend following and mean reversion. We will enter a long position at $251, anticipating the forecast price of $256. A stop loss will be placed at $245 to protect against a sudden downturn, and the initial target price will be $262, aligning with the forecast for April 13, 2026. To refine the strategy, we will incorporate RSI signals. If the RSI drops below 40, indicating an oversold condition, we will enter a long position at the prevailing price, with a stop loss at the nearest support level of $242 and a target price of $256. Conversely, if the RSI exceeds 70, suggesting an overbought condition, we will consider a short position at the prevailing price, with a stop loss at the nearest resistance level of $264 and a target price of $251. This combined approach aims to maximize returns by capitalizing on both trend following and mean reversion opportunities, while carefully managing risk with strategically placed stop-loss orders. Based on the historical data and forecast, DeXe shows a strong upward trend, consistently breaking through resistance levels. The RSI consistently remains above 70, indicating overbought conditions, but the price continues to climb, suggesting strong bullish momentum. The Bollinger Bands have been expanding, with the price frequently touching the upper band, further confirming the upward trajectory. Given this, I recommend a long-term bullish strategy. We will enter a long position at $9.02, placing a stop-loss order at $8.64 to mitigate potential downside risk. The initial target price will be $9.83, capitalizing on the forecasted upward movement. To maximize returns and manage risk, I propose a tiered profit-taking approach. After reaching $9.83, we will move the stop-loss to break-even, securing the initial investment. Subsequently, we will set a second target price at $10.2, aiming to capture further gains from the anticipated bullish continuation. This strategy combines RSI, Bollinger Bands, and support/resistance analysis to identify high-probability trading opportunities, balancing potential rewards with prudent risk management. The overall portfolio will be weighted 60% towards this long position, with the remaining 40% allocated to other assets to diversify risk. Based on the historical data and forecast, Maple Finance has shown a downtrend from March 24, 2026, to April 6, 2026, with the price fluctuating around the $0.2 support level. The RSI consistently remained below 50, indicating a weakening momentum. The forecast for the next week suggests a slight upward trend, but still within a narrow range. Considering the Bollinger Bands, the price is currently near the lower band, indicating potential for a short-term bounce. Therefore, I recommend a contrarian strategy focusing on short-term gains. My proposed strategy is to initiate a long position at $0.213. Given the recent price action and the proximity to the support level, a stop-loss should be placed just below the support at $0.198 to mitigate potential losses if the downtrend continues. The initial target price will be the center of the Bollinger Bands, which is $0.236. If the price reaches $0.236, we can reevaluate the situation and potentially set a higher target price based on the prevailing trend. This strategy aims to capitalize on short-term bounces while limiting risk with a well-defined stop-loss. Based on the historical data and forecast, SKY exhibits an upward trend. The price has been fluctuating within the range of 0.0744 to 0.0814, with the RSI indicating a range between 45.6 and 58.7, suggesting neither extreme overbought nor oversold conditions. The Bollinger Bands have been widening recently, indicating increasing volatility and potential for price movement. The forecast for the next week predicts a continued upward trajectory, with prices reaching 0.0817. Considering these factors, I recommend a long position strategy. My strategy involves entering a long position at 0.0767 plus $. The stop loss will be set at 0.0744 plus $, just below the support level, to limit potential losses. The initial target price will be 0.0814 plus $, aligning with the resistance level. If the price breaks through the resistance, the target price will be adjusted to 0.0817 plus $. This strategy combines trend analysis, support and resistance levels, and Bollinger Bands to maximize potential returns while managing risk effectively. This approach aims to capitalize on the anticipated upward momentum of SKY. Based on the historical data and forecast, Morpho shows a downtrend, with the price fluctuating between support at $1.48 and resistance at $1.74. The RSI consistently hovers below 50, indicating a weakening momentum. The Bollinger Bands have been contracting, suggesting decreasing volatility. Considering this, a short position strategy is recommended. We will initiate a short position when the price touches the resistance level of $1.74. The stop loss will be set at $1.78 to protect against unexpected upward movements. The initial target price will be the support level of $1.48, offering a substantial profit margin. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI falls below 35, indicating an oversold condition, we'll consider covering the short position partially to secure profits. Additionally, if the price touches the lower Bollinger Band, which is currently around $1.37, we'll adjust the target price to $1.4. This combined strategy balances risk and reward, capitalizing on the downtrend while mitigating potential losses with dynamic adjustments based on technical indicators. The final portfolio will prioritize the short position with adjusted target prices and stop-loss levels based on RSI and Bollinger Band signals. Based on the historical data and forecast, Kite has been in a downtrend, with prices consistently declining over the past 2 weeks. The support price remains steady at $0.129, while the resistance fluctuates around $0.156. The RSI consistently indicates oversold conditions, falling below 40, suggesting potential for a bounce. The Bollinger Bands show a narrowing range, which often precedes significant price movements. The forecast for the next week predicts a continued, albeit slight, downtrend, hovering around $0.145. Given these factors, I recommend a contrarian strategy focusing on short-term gains by anticipating a temporary rebound. My investment strategy involves a long position with an entry price of $0.149. The stop loss should be set at $0.129, right at the support level, to limit potential losses if the downtrend continues. The target price is $0.156, aligning with the resistance level. This strategy leverages the oversold RSI and the potential for a bounce off the support level. If the price reaches the target, consider taking profits and reevaluating the trend. This strategy aims for a quick profit from a short-term rebound, acknowledging the overall downtrend.